Welcome ECO151 students to week 7. During this week, we will cover the theory of demand using the utility approach. Our main aim is to understand consumer behavior in greater detail so that we can positively provide explanations of why the demand curve slopes downwards. Remember, up to now, we know that the demand curve slopes downwards due to the law of demand. There are two approaches used to explain consumer choices, namely the utility approach, which is our main focus, and the indifference curve approach. In studying the utility approach, we will be exposed to important concepts in economics, which include utility, marginal utility, and weighted marginal utility, as well as important relationships between total, marginal, and average values. Our discussion for this chapter will be structured as follows. Firstly, we will focus on the concept of utility, followed by the concept of marginal and total utility. Then thereafter, we will analyze consumer equilibrium using the utility approach. After understanding the equilibrium condition and the effects of a price change on consumer behavior, we will then derive the demand curve for a product. Lastly, we will end with a short comment on the utility approach. Therefore, after studying this chapter, you should be able to 1. Define utility, marginal utility, and weighted marginal utility. 2. Explain the relationship between total, average, and marginal values. 3. State the condition for consumer equilibrium. 4. Use the weighted marginal utility to derive a demand curve. The theory of consumer behavior is relatively easy to understand since we are all consumers. However, it is important to remember that theory is always a simplification of reality that helps us to understand how certain variables behaves. Thus, it is always an abstract. In deriving our theory of demand, we will use simplifying assumptions to make our analysis easy to comprehend. But always remember that we adopted assumptions in our model. Failure to take note of these assumptions tend to be a source of frustration for students who confuse theory with descriptions. Consumers consume different products to satisfy their wants. In analyzing consumer choice, we assume that for each good we consume, our main aim is to maximize satisfaction given the available means and all other alternatives at our disposal. Therefore, utility is a term that reflects consumer satisfaction. It measures the degree of satisfaction that a household or consumer derive or expect to derive from the consumption of a good or service. Thus, the purpose of consumer theory can be restated as the maximization of utility given the available means and alternative consumption possibilities. The utility of a good is the degree to which it satisfies human wants. However, how one person is satisfied by the consumption of a good is not the same for everyone else, and it differs with time and place. Hence, there is no unique measurable utility for everyone. More so, no instrument or yardstick is used to measure utility objectively. As a result, we cannot compare the levels of utility of one person and the other. In analyzing consumer behavior, we use two notions of utility, namely cardinal utility and ordinal utility. Cardinal utility is based on the idea that utility can be measured in some way, whereas ordinal utility is based on the idea that bundles of consumer goods and services can be arranged or ordered in order of preference. Thus, ordinal is derived from the word ordering. The utility approach in the evaluation of consumer behavior is based on the assumption that consumers can subjectively assign values to the amount of utility or satisfaction that an individual receives from the consumption of each successive unit of a good or a service. Since numerical values are assigned to reflect satisfaction, It is further assumed that one can compare the utility of different consumer goods quantitatively. In short, the utility approach is based on the notion of cardinal utility. Recall that cardinal notion of utility assumes that an individual can and does subjectively assign values to the utility derived from the consumption of successive units of a product. For simplicity as well as differentiation purposes of these units from other measurements, we will measure utility using utils. To understand the concept of marginal and total utility, let us consider Table 6.1, which outlines Table Botha's satisfaction derived from the consumption of apples. Suppose after consuming the first apple, Tabo receives 50 utils. When he consumes the second apple, his utility intensity decreases and receives 35 utils. The process goes on and on for each extra apple he consumes. For each extra unit of an apple Tabo consumes, he receives less and less satisfaction. The extra or additional utility Tabo received from the consumption of an additional unit of an apple is called marginal utility. If we cumulatively sum all the marginal utilities received by a consumer, we obtain total utility. Looking at Table 6.1 data, we observe that after consuming the seventh apple, Tabo is satiated, or in other words, Tabo is reached the maximum consumption point, he is full. Any other further consumption of apples after this point will yield a negative utility or disutility. Looking at Table 6.1, we observe relationships between Tabo's marginal and total utility as he consumes each extra unit of apples. Firstly, we see that total utility increases as long as marginal utility is positive. Then secondly, we notice that total utility reaches a maximum when marginal utility is zero, or after the consumer is satiated. Then lastly, total utility decreases when marginal utility becomes negative or when disutility sets in. Please take some time to study box 6.1, which outline the relationship between average, total, and marginal values. Analysis of Table 6.1 also reveal the law of diminishing marginal utility, or Gaussian's law. This law states that the marginal utility of a good or service eventually declines as more of it is consumed during a particular period. Let us try a natural test of the theory of diminishing marginal utility. Since we are all consumers, you need to take a product that you love the most, for example, a box of chocolates, a packet of sweets, or a case of beer. Then consume 1 unit of the product at a time consecutively. As you consume the good, assign utility values to each unit of the good consumed and document the results. From your own experiment, do the results reflect the theory of diminishing marginal utility? Please confirm from what your findings will be after attempting this simple natural experiment. And what you find out is that your experience will reveal the element, or it will be much closer to the element of diminishing marginal utility. In analyzing consumer choices, we assume that consumers attempt to maximize their satisfaction by consuming goods and services. That is, their aim is to achieve the highest attainable level of total utility. The adjective attainable is important as it reflects what maximizes our satisfaction should be affordable. Therefore, in equilibrium, a consumer receives total utility from the consumption of goods and services given the prices of the goods. This means for a consumer to reach a point where he or she has no intention to change consumption plans, the consumer should have attained the highest possible utility as well as utilize all available income in the consumption of the goods. Furthermore, as the consumer is making choices over the goods he or she wants to purchase, we assume that they are in a position to arrange their wants in order of importance according to a list known as the scale of preference. Note that here we are not saying consumers do write down a list, but rather they make rational decisions based on a scale of preference at the back of their minds. Let us use an example to reflect such a scale of preference. Suppose we have a consumer called Winnie Mahlaba that consumes three goods, namely bread, meat, and rice. Bread costs 10 rand per unit, meat costs 30 rand per unit, and rice costs 20 rand per unit. Table 6.2 illustrates Winnie Shaba's marginal utility, total utility, as well as the weighted marginal utility for each good consumed. If Winnie consumes the third unit of bread, she will receive 42 utils, and the total utility from consuming 3 units of bread is 144 utils. However, if she consumes 10 units of bread, 10 units of meat, and 10 units of rice, her total utility will be equal to 1155 utils, which is the total maximum satisfaction that she can obtain from consuming the three goods. The term weighted marginal utility refers to the marginal utility per unit divided by the price per unit. Recall, for Winnie to attain equilibrium, she must consume goods that give her the maximum attainable level of total utility. However, from the information in Table 6.2, we do not have information on whether she can afford the 1155 utils or any other combination of goods. Suppose Winnie has a weekly budget of 120 Rand available to spend on buying the three goods. Which combination of goods should she purchase? To determine the combination that gives her total utility whilst spending all her income, Winnie has to first determine the total utility of all possible combination of the three goods that she can purchase with the 120 Rand. Then secondly, she chooses the bundle that gives her the total utility with all her income spent on the goods. Table 6.3 outline all the possible combinations of bread, meat, and rice that Winnie can purchase with 120 Rand, as well as the associated total utilities. From the table, we observe that the highest total utility that Winnie can receive is 426 utils from the consumption of combination number 7, where she consumes 5 units of bread, 1 unit of meat, and 2 units of rice. Remember, 5 units of bread cost 50 Rand, 1 unit of meat cost 30 Rand, and 2 units of rice will cost 40 Rand. Therefore, the total cost of the combination number 7 bundle is 120 Rand. Thus, Winnie is utilizing all her income and receiving total utility from the consumption of combination 7. This means Winnie is consuming the utility maximizing bundle of goods, or she is in equilibrium if she consumes the combination of goods that are listed under option 7. The approach we have used so far to obtain Winnie's equilibrium condition of the three goods she consumes is quite long and very cumbersome. Nevertheless, there exists another easier way we can use to determine the combination of the three goods that maximizes Winnie's utility. That is through the use of weighted marginal utilities. If we return back to table 6.2, we can see that a combination of 5 units of bread, 1 unit of meat, and 2 units of rice all have the same weighted marginal utility. Therefore, when the marginal utilities are equal and the consumer has spent all the available income, then the consumer will be in equilibrium. At this equilibrium, the consumer derives the same utility from the last rand spent on each product. In symbol, the equilibrium condition is reflected as follows. The marginal utility of B divided by the price of B should be equal to the marginal utility of M divided by the price of M, which should also be equal to the marginal utility of R divided by the price of R. Therefore, for equilibrium to exist, two conditions has to be met. The first condition is that the weighted marginal utilities of the two goods must be equal. The second condition is that the combination of the goods purchased has to be affordable. This is sometimes referred to as the law of equalizing the weighted marginal utilities. As the weighted marginal utilities are equalized, it reflects that the consumer subjective evaluation of the relative importance of the two goods is the same as the objective valuation of the market as shown by the market price of the two goods. In simpler terms, for a consumer to achieve equilibrium, the weighted marginal utilities of the different goods must be equal and the consumer must spend all his or her available income. We can further manipulate the equilibrium condition to reflect that at equilibrium, the ratio of marginal utility is equal to the ratio of market prices. This simply means that the rate at which the consumer is subjectively willing to exchange the goods is equal to the rate at which the goods are exchanged in the market. A demand curve illustrates the quantities demanded of a good at different price levels. Let us now use an example to illustrate how consumer equilibrium change when there are changes to the price of a product. Suppose Jenna Pillay has 100 Rand available to spend on yogurt and chocolate. Chocolate costs 20 Rand per unit, whilst yogurt costs 30 Rand per unit. Jenna's scale of preference is reflected by table 6.4. The best combination that Jenna can buy, which maximizes her total utility, comprised of 2 units of chocolates and 2 units of yogurt. Please confirm that this combination utilizes all the available income of Jenna. Remember also that this maximizing condition was chosen based on the equilibrium condition where the weighted marginal utilities were equal and the consumer chosen goods were affordable. Now that the consumer has chosen the utility maximizing combination of the two goods, what will then happen if there is a change in the price of one of these products? For example, let's say chocolate price change from 20 Rand to 10 Rand, ceteris paribus. When the price of chocolate falls to 10 Rand, ceteris paribus, Jenna's new weekly consumption schedule is reflected in Table 6.5. The only noticeable changes are reflected by the price of chocolate and the weighted marginal utility of chocolate. She now maximizes total utility by consuming 4 units of chocolate and 2 units of yogurt per week. Again, please confirm if this combination utilizes all the available income. Note that at the new equilibrium, Jenner's ratio of marginal utilities is equal to the price ratio of the two goods. The outcome from the change in the price of chocolate, ceteris paribus, reflect that Jenna increased her total utility from 119 to 143 by consuming a greater quantity of chocolate following a price fall in chocolate. This is exactly what is reflected by the demand curve, or what the law of demand is all about. Therefore, the individual demand curve slopes downwards from left to right as reflected in figure 6.1. At the price of 20 Rand, 2 units of chocolates are demanded, that is point A, and at the price of 40 Rand, 4 units of chocolates are demanded, which is point B. If we join these 2 points, we obtain Jenner's demand curve for chocolate, which slopes downwards from left to right. Up to now, we have analyzed consumer decisions using the utility approach, which is based on the notion of cardinal utility. Furthermore, we have explained the derivation of the downward sloping demand curve. The most important key concept we have learned is the concept of marginal utility. You need to understand this concept, as well as how marginal, average, and total values are related. See box 6.1. As you use this concept more often from now onwards. It is important to understand that utility cannot be measured objectively, but rather subjectively. However, there is another approach which yields the same results but does not rely on the assumption of cardinal utility. This approach is called the indifference approach. Please take some time to read chapter 6 as well as chapter 8 of the micro book and summarize them for your own purposes. Note taking purposes. And also, please do attempt and practice questions on chapter 6, chapter 5, as well as chapter 8, as this builds you up in terms of understanding the concept that you have learned.